The ISM is where, when we get above 50 and start expanding, is where alt season is. That's the real game in town. You need a booming economy and lots of liquidity to drive the money shot. The PBOC is going to be stepping on the gas. Interesting. Look when it peaks. It peaks in 2026. That's super interesting. This is the chart that everyone on Twitter has got a different time horizon for. This is the one we've been using. I've not really shared it super publicly, but this is gold with a 188-day lead, so 6 months lead versus Bitcoin. It's a stunner, right? It's an absolute stunner. So as of tomorrow, every single fucker on X is going to be using this chart and claiming it's theirs. You haven't heard this from anybody yet. The thing that is happening is the Fed were tightening because the Treasury General Account was being built ahead of the government shutdown. The Treasury General Account got built. Meanwhile, the reverse repo got drained to zero. We know the answer to tightness in liquidity. It is the opposite. It is more cowbell. So as more cowbell comes in, things snap back.
In today's video, Raoul Pal reveals the one force driving every market on Earth, liquidity, and why it's about to unleash what he calls the banana zone, where everything goes vertical. From Bitcoin and gold to the NASDAQ and small caps, Raoul shows how rising liquidity cycles and central bank balance sheets set the stage for the next massive bull run. He breaks down the PBOC's latest moves, gold's new role as a leading indicator, and how a government liquidity squeeze is quietly holding back the flood for now. Stay tuned as Raoul connects the global liquidity puzzle and explains why the next wave of capital could ignite sooner than anyone thinks. Join our Telegram for daily macro insights, links in the description. Let's catch Raoul up to know more.
The ISM is where, when we get above 50 and start expanding, is where alt season is. It's where the Russell 2000 breaks out. It's where the small caps start going. It's where the riskier credit starts moving. That's the real game in town. You need a booming economy and lots of liquidity to drive the money shot. The way you can make money by just throwing a dart on your screen and whatever it hits will go up. That's to come. Those are the banana zone points when things really accelerate. It's all coming. It's a matter of patience. Don't forget, the ISM has one data point a month. And you think you're trading it with your tick charts on your screen. You are sadly deluded. That's not how this works. So hence why you just kind of do nothing and let this play out. We've got the game here. The game here is that. The game here allows the asset prices to move because total liquidity is the thing that drives Bitcoin and the NASDAQ, which are the things we really care about. Interestingly, gold actually follows, or actually is, basically current financial conditions. So financial conditions and gold are all in the future. And so when you look at gold against total liquidity, it's telling you liquidity is about to explode. And that's a really interesting thing. Gold has shifted around. Sometimes it's real rates, and other times it's other things. Other times it's just the dollar. But right now, gold's highest correlation in this kind of Bayesian world where probabilities shift and correlations shift is it's all about financial conditions. And it's basically telling us the financial conditions here are going to explode weaker. Okay, super interesting. Will it work out exactly like this? Hell no. Will it be rhyming? Hell yes. So liquidity is rising. Okay, so what's really going to push a massive rise in liquidity? Well, hello, the PBOC. We've been using this chart of the Chinese central bank balance sheet, which is the only major government using their balance sheet right now, versus 10-year bond yields with like a 2-year lead. And it's been working perfectly since we started pulling this out in 2022. And what it's suggesting is we're now in the acceleration of the use of the PBOC balance sheet. Balance sheets are like the most powerful force multiplier. Somebody's going to be using one somewhere. Back in 2017, it was the Chinese that drove the entire crypto cycle because the US was tightening rates. And it was doing QT. I mean, all of the bad things, all over ridden by the fact that the PBOC, the UK, and the ECB all stepped on the gas. The PBOC is going to be stepping on the gas. Interesting. Look when it peaks. It peaks in 2026. That's super interesting. We also know that gold leads by a significant period of time, about 12 months versus ISM, and that's telling us that, in 12 months' time, we're still not peaking the business cycle. Has gold peaked today or not? I'm not sure. I still kind of think it goes another leg from here, but we have some more volatility, more correction, another leg higher. I'm indifferent to it. I'm not in the gold trade right now, but what it does is give us a lead on the cycle.
Raoul's basically saying we're on the verge of another big liquidity wave. When ISM rises and liquidity floods in, everything risk on, stocks, crypto, small caps takes off. And gold? It's now the early signal. When gold moves, it means liquidity's about to explode.
So go back to the gold chart. This is the chart that everyone on Twitter has got a different time horizon for. This is the one we've been using. I've not really shared it super publicly, but this is gold with a 188-day lead, so 6 months lead versus Bitcoin. It's a stunner, eh? It's an absolute stunner. So as of tomorrow, every single fucker on X is going to be using this chart and claiming it's theirs. If you would just remember, now the problem with this one, it's not the pink GMI one. So if you see this, just make sure that it's our chart, because I've not seen this one. Everyone's using like a 90-day one or a 60-day one. This is the one, I think. What we've got is a slight divergence against, I don't think you can see my mouse, but there's a slight divergence versus that chart. And that doesn't look anything on the chart. I mean, it's noisy, right? Nothing fits perfectly. Keep trying to say this 1,000 times, and everyone goes, oh, why did that chart break? It's like, morons. Please listen, you're not serious people. So what it suggests to me is we have catch up to do, and that goes into the end of the year. And then we'd have a period where everyone says the cycle is over, and what happens is nothing. The bears get really aggressive and it doesn't work. The bulls get miserable and start questioning their own lives and whether they fuck this whole thing up, and nothing happens. And then eventually, April, May, as ever, it explodes higher again. That's what this is telling you. I think this is probably the closest estimation in my head and what I think plays out. Let's go to April 17 to 18. There's a similar pattern here, similar kind of part in the cycle. Obviously, we think the cycle extends, but there is similarities, and we've got alligator jaws. Oh no, alligator jaws. What normally the alligator jaws will do is Bitcoin should be at about 140,000 now, but it's not. So it's diverged a bit. Oh, it's all broken, it's failed. No, I'll explain why. Because there's always reasons why things are different. Here's Bitcoin 2020 versus 2021. This seems like it's the right point in the cycle versus the previous chart, which was the final year of the cycle. This is the prior year of the cycle. And what we've got is this divergence again. I mean, look how beautifully tight that correlation is. Alligator jaws. Oh, well, it's all broken down, Raoul. This is all worthless. Spurious correlation, blah, 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 blah. Sort of. NASDAQ versus Bitcoin. NASDAQ's been doing great. I've seen all of you kind of paper-handed ninnies all going, well, I'm just going to trade tech stocks now. And what's hilarious is the amount of people from crypto have gone, well, it's gold. I'm going to buy gold instead. It's all the same trade, leads and lags. But everything divided by Bitcoin is down 99.9% over time. Just remember that when you're switching around. Tech stocks, I love. Great opportunities. NASDAQ's been stronger than Bitcoin. What gives? Aren't they supposed to be all driven by the same liquidity factor? Well, what gives is, here's the liquidity factor, global M2 and NASDAQ. I'd rather use total global liquidity, but this is a weekly chart, so it makes it easier. Basically, 97.5% of all of NASDAQ is explained by the one variable, the most powerful macro variable on Earth, liquidity. And this is a proxy for total global liquidity. In Bitcoin, it's 90%. But occasionally, look at this in the NASDAQ. Do you remember when we came out and said, you need to buy the NASDAQ, it's well overshot versus liquidity? Guess what happened? The alligator jaws shut. We saw the alligator jaws the opposite way around here. It works because it's 97% of everything that happens to the NASDAQ is the one variable.
Raoul's showing just how dominant liquidity really is. He's proving that nearly everything in markets from Bitcoin to the NASDAQ moves with global liquidity. When liquidity expands, risk assets surge. When it contracts, they sink. It's not random, it's math.
So why is this going on right now? Why is the NASDAQ diverging? Why is Bitcoin diverging from 2020? Why is it diverging here? Why is it diverging here? And the answer is, you haven't heard this from anybody yet, but this is, I talked to you last month in the Drinks with Raoul that the thing that is happening is the Fed were tightening because the Treasury General Account was being built ahead of the government shutdown. The Treasury General Account got built. Meanwhile, the reverse repo got drained to zero. So there's one lever. If they don't use the balance sheet, there's one lever left for the Treasury and the Fed to use in driving liquidity currently. And that is the Treasury General Account. That's the checking account of the Fed. And so they've been building it up, putting some cash in the system ready for this moment. And what they then do is they will then release it by spending that money. But there's an issue with spending that money. There's a government shutdown. There's nothing to spend it on. So what we've got is this period since kind of end of September, October, when, guess what, crypto started underperforming, where liquidity has stopped at the lows. And this is the lows going back several years. And that's normally driven by the Treasury General Account rebuild, and then it normally bounces back in quarter end. But we have both of those factors and it's not bounced back because there's nothing to spend the money on because the government is suspended right now. So what you get is this weird pattern where there's no liquidity because they're not using stuff like the SFR, SLR, all of these other acronyms to inject money into the banking system. They're trying to get there. The Fed is cutting rates, but cutting rates doesn't really change liquidity. It changes financial conditions somewhat, but it doesn't change liquidity. So liquidity is kind of trapped in the US. And the US is quite dominant in liquidity because the dollar is the world's reserve currency. So this period of the government shutdown means that crypto's weak. Why is NASDAQ not weak and crypto is? Well, NASDAQ's been choppy. It's basically where it was when this whole period started. But crypto's weaker because crypto's further out the risk curve. There are no earnings in crypto, really. These are very long duration assets. So they are the most susceptible to liquidity. If liquidity withdraws, they fall the most. If liquidity comes in, they rise the most. So here we are where liquidity is being withdrawn or withheld, not really withdrawn. They're not trying to do that. They have no choice. They have no way, unless they can get through stuff through Congress, to inject liquidity unless there's a mini crisis. And we've seen a bit of wobbliness in the plumbing system, but not enough for them to actually go and do something to inject liquidity. So I'm sure Scott Bessent and I'm sure the Fed are looking at this thinking, Christ, we've got no liquidity. We saw South Korea asking for unlimited swap lines. What does that say? It tells you the eurodollar market is too tight. So US liquidity, because it's still constrained by this one factor, there's no balance sheet being worked, there's no reverse repo being drained. We've got this one factor, and that's supposed to be driving all the US dollar liquidity. Well, that struggles. It struggles because it's not big enough to go all the way out to the eurodollar markets and to the South Korean banks and the European banks and the Japanese banks. So they need swap lines. So it's telling you that things are tight. And we know the answer to tightness in liquidity. It is the opposite. It is more cowbell. So as more cowbell comes in, things snap back. And that's where we are. We're at this kind of super mini version of 2019 where the Fed pivoted and everything had to change because of this liquidity issue. And this liquidity issue is what's driving stuff now. So I hope I've explained it to you. The government shutdown Yes, there's a couple of guys talking about it ending this week. The prediction markets are like mid-November. So let's think this could go on a little longer than expected. And in which case, liquidity is not coming into the system unless the Chinese really push further, or somebody else, the Europeans, the Japanese, or one of the other large economies, the Canadians or the Aussies or the Brits, do something.
So Raoul's message is clear. It all comes down to liquidity. When central banks expand their balance sheets and money starts flowing, risk assets wake up from gold and Bitcoin to the NASDAQ itself. Right now, we're sitting in that calm before the storm, but as liquidity turns, the next major melt-up could already be in motion. If you got value from this breakdown, hit subscribe, drop a like, and join our Telegram for daily macro insights. The liquidity tide is shifting, don't miss the wave.